Good morning, this is Wayne Bilal and Tessie with another smart profit maximizing moment. Today's Thursday, tomorrow she'll get your cast off, so hopefully we'll have well, I was going to say a full puppy, but 3.5 legs, she's still faster than me. Today we're going to talk about organized taxpayers pay less. Say bye, I'm going to put you down. Bye, 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 bye. She's got her morning. Like I got a lot of energy. I wish I had half that energy, hell, a third of that energy. I'm going to talk about organized taxpayers pay less. But first of all, let me do a better job introducing myself. My name is Wayne Bilal. I'm founder of a local CPA firm. We're actually celebrating our 28th anniversary. So I've been doing this a long, long time. In fact, I've been doing it a lot longer than that. I passed the CPA exam back in the late 70s. Started before that working at a CPA firm, and pretty much all my time has been working with small business owners, except for a 6 or 7 year stint where I was in the private industry, working at Magnolia Coca-Cola first as a comptroller, then as their CFO. So all through that time, I've learned that, what helps business owners make more money. Simply put, that's what our job is. So we do 3 main things, and all of them are designed to, 2 out of 3 are designed to make sure that the business owner keeps more money in their pockets. So first of all, I'm the founder of the Smart Profit Maximizing System, which includes the 21 steps to mining the gold hiding in your business. Keep your eyes open for that. We're going to be doing a little bit more on that. We've helped quite a few clients make money. I'm not going to waste a lot of time on this. We recently did one where we helped, without increasing any sales, help them increase their bottom line by over $350,000. Pretty cool. Second thing we do is tax planning. In the last 3 years alone, we've saved our clients over $4.3 million legally. I like my clients, but I don't want to share a jail cell with them. And that's money that they didn't send to the IRS that they could use to fund their vacation, pay their retirement, pay off bills, expand their business, whatever. They didn't send it to the IRS. All right, that's simple. And the last thing we do, of course, is tax returns. And we're going to talk about that because that's the subject. And we do between 600 and 700 tax returns, business owners and their businesses mainly. We do a few H&R Block style simple returns. We don't turn anybody away, but sadly we tend to be cheaper than them. H&R Block and those guys have gotten crazy. Let's talk about organized taxpayers pay less. Every year on the 15th of April, and again at extension time, you'll have some TV reporter down at the post office showing a rush of taxpayers frantically trying to beat the tax filing deadline. Any experienced taxpayer preparer looks at that scene and just knows that these last-minute preparers are probably, last-minute filers are probably paying more taxes than they should, all right? There's a couple of key points to keep in mind about your hard-earned money, especially if you want to keep it with you. Understand that just about all of your income is taxable, and just about all of it is reported to the IRS, all right? And 2, expenses are not allowed unless I can point to some place in the code that they are, and you have documentation. So that's why organized taxpayers pay less. Every year I prepare tax returns without all the possible tax deductions because simply they don't have the backup. And with technology nowadays, that just isn't really possible, really shouldn't happen. There's 2 tools that I'd like you to think about. One is called MileIQ, tracks your mileage. Mileage is pretty simple. If you don't, the IRS's code says that you need to have a log. Well, most people don't get in there and write it down, and I got a few, all right? MileIQ is on your phone. Even if you forget to turn on the app, it's there, and it captures the miles for you to put later, and that works. You can print it. It's saved online even if you lose your phone. Second one I like, there's different ones out there. I use what's called Topcard. What it basically does is capture those receipts that you lose, the easy receipts, the small ones. Say I go and take a client and meet them at the coffee shop. I give them the Topcard. It immediately it charges it, and within 30 seconds usually I get a notification on my phone that says, hey, I saw you spent $15, whatever. Tell us about it. It turns on my camera, I take a picture of the receipt, turns on my microphone, I say I took John Smith, whatever, for a cup of coffee, we discussed X, Y, and Z. Boom, got it. End of discussion. All right? What happens though is not that. Normally people forget to tell me their income, so early September I start to get these panicky IRS letters that are being brought in where they forgot to tell us something like, oh, hey, I won some money gambling. I didn't know that was taxable. Well, what did I say? Just about everything's taxable and reported. If you want more than $600, they're going to send a 1099. Okay. Interest income from savings accounts, if they're big enough, you forget to tell us. Retirement accounts, W-2s from jobs you forgot. You'd be amazed what we hear. The end result of forgetting to report income is you're going to get some hassle, some stress, and you're going to pay some penalties and interest in the taxes. Okay. What you need to keep, pretty much, if in doubt, don't throw it away. All right. Err on the side of caution, but don't have to keep records that are not related to non-deductible expenses, such as your personal phone bill. What you should keep is all the documents that you think you're going to need. So at the end of the year, yeah, as stuff starts coming in the mail, put it in a folder, but I'm talking about all through the year. So use something like the Topcard, use something like MileIQ, put a filing system together, have good books. I just did somebody yesterday that, I sent them close to $40,000 in expenses that then whatever the bookkeeper just put check number and amount, didn't tell us what it was. It looks like about 20,000 of it are going to go to personal because I can't figure out what it is. That shows a whole ton of confusion and lack of organization. All right, here's some simple steps to reduce your stress and cut your taxes. Open all your mail in January and February. Don't pile it up somewhere, and pull out the file documents. Put copies of all deductible receipts in a folder throughout the year, or better yet, use the Topcard so that it's scanned for you. Check the odometer on your car and write down the mileage at the beginning of the year. Keep all of your your tune-up, and when you bring it in to change the oil and things like that, keep all the receipts so that you can prove what your mileage was at that time. Review last year's return and make a list of items. Call your tax preparer in January and ask for an organizer. We don't mail them out anymore because most of them came back unopened, but if you request one, we give it to you. Keep your business accounting up to date monthly. I said that. Monthly at least. Weekly, daily would be best. There's no excuse not to. Keep a summary of your income and expenses for your tax preparer. Keep a copy for yourself and compare it to the completed return before you sign it. At the end of the day, you are responsible for it. Give me a second. Tessie wants to go say hi. Yep, there they go. Yep, there you go. My daughter comes in and Tessie needs to go say hi. Make a list of questions that you have for your tax preparer. Call them up during the year before you make any crazy deductions. As you can see, the trick to organize it is just creating a simple system that you will follow. Since your tax information is the same pretty much year to year, the system will work for you far into the future. Use the system I outlined above. Use the Topcard. Use MileIQ. You'll definitely lower your taxes. Look, one of the mistakes I see, well, I just won't report all my income. I'll have crappy records. They won't be able to redo it. Yeah, they will. All right? The IRS will either get your bank statements, and you got to prove every deposit is not a income item. So that's why it's a good idea to separate personal deposits into a personal account, business deposits into a business account. And even if you use cash, they will recalculate it. I've been involved in one where they went into a pizza place and calculated how much cheese and dough and everything they bought, calculated how many pizzas they should have made, did the math and said you're short by $50,000. It's up to you to prove otherwise. And the reason they can do that is because your records are bad. They're just not good. So make sure, nowadays it's stupid. You have a point of sale, use it, make sure you ring up every sale. Why? Because if your records are bad, you're losing expenses. And my experience has been you're losing more in the expenses than you're cutting off on income by trying to be, let's call it what it is, by trying to cheat. Hey, until next time, this is Wayne Blau saying let's make this our most profitable year ever. Thank you very much.